Question 21. Which of the following items is not an expense? A. Wages. B. Rent. C. Electricity. Or D. Drawings. To answer this, we'll look at the definition of an expense. An expense is 1. An outflow of economic benefits. 2. That will either decrease assets or increase liabilities. And C, it will have the ultimate effect of decreasing owner's equity. To answer any of these theoretical questions about an expense, it's really important that you remember the 3 criteria that make an expense. Now that we know that, let's go and apply that definition to wages, rent, electricity, and drawings. Are all of those or any of those items an outflow of economic benefits? That is true, they all are. They all result in money at some point leaving the business to pay another party. Therefore, criteria 2 is also true. Now, if we pay money to another party, the business's cash asset will go down. So therefore, criteria 2 is true. What they'll also do is all 4 of those options will also decrease owner's equity. What we've been asked to do with this question is look at which one is not an expense. So at this point, we can't tell. It looks like they all are expenses. They all clearly meet the definition. So which one can we rule out then? It's all got to do with the entity principle. This is why this is a good question. It applies another topic or another theoretical concept of accounting called the entity principle. The entity principle says the business must be a separate entity from its owner, and the transactions and financial records of the business should be kept separate from the owner's personal transactions. What does that mean? It means that we consider the business and the owner as separate bubbles or separate entities. Therefore, if the business pays the owner drawings, which is cash, that is not a business expense. It's actually just the transfer of capital from the business to the owner. Based on that, that is a personal transaction of the owner. It is not an expense. So withdrawal of capital is not an expense. It meets all the criteria. It's an outflow of economic benefits, which decreases an asset and decreases owner's equity, but it is not actually an expense. Looking at our question, that means we can rule out all options except for option D, which is not an expense because drawings do not meet the definition, just a withdrawal of capital by the owner.